guys, Ray here with Mastermind Traders Academy. All right, so today it is Saturday, um, June 8th, 2019. And what I'll be doing is walking you guys through these currency pairs. Now, of course, this is the first time I'm looking at the chart since yesterday. So bear with me, guys, as I do my analysis. It may not be as quick as when I do prepare by looking at the charts prior to making my videos. So, all right, let's get with it. All right, so we are on the euro dollar right now, and we're on the daily chart, and we can see a strong up move on the daily chart based off these this triple bottom right here. So with this triple bottom, we want to find out where this actually why market hit this level of support and then rallied upwards. Now, what we want to do, since we can't find anything to the left of the chart, we want to go to a larger time frame. So let's go up to A to W1 and see what was going on. Now on W1, if you guys notice this, if we look all the way to the left, you'll see where the market reacted numerous times here. And it just so happened that price came down and retested these same levels. So it goes to show past resistance becomes future support. And this was all the way back in 2016. And then the market hit support again back in 2019. Now, since we're on the weekly chart, we want to identify where price is likely to go. And what I'm seeing here is this cluster right here of resistance. We're expecting the market to retest these highs. Not sure if by next week, but I'm expecting the market to retest these highs some point in the future. So right now, my bias on this pair is strictly bullish. Now, also, if we look at the MACD and where price is, look at what happened here. The market hit a low there. Let me draw that. And so did the MACD. So the MACD and price hit a low at the same time. What happened next is that the market created a new low, but the MACD created a new high. MACD created newer low, MACD created a higher high. So right here we have what is called divergence. So let me see if I can write that there. Oops. So we got divergence. And this is considered to be a bullish divergence. Okay? So we got a bullish divergence here where we're expecting the market to continue rallying back into these levels of resistance at some point. All right, now let's head down to the smaller time frame. All right, so back on the daily chart, again we see here at 114.47, let's say 114.50, we got a nice set of resistance up here. Looking at these levels right here, now we were expecting market to actually hold at these levels. Honestly, I was expecting price to hold at this level and then dip, but instead it actually broke over resistance here, if you can see. So we see a break of resistance at that level. Therefore, very likely price is going to continue going higher right there. We're seeing this level as resistance. If we look over here, nice resistance, nice resistance, nice resistance, nice resistance, support. So past support again becomes future resistance right there. So we're expecting the market to actually head into this level of resistance. Now, what's my trade bias on this trade? Well, price has already left the station right here, guys. Price has already left the station again, past resistance becoming support here. And what I'm looking for is a sell trade back in from these levels right here. So I'm actually willing to wait for price to hit this level of resistance and then look for a sell trade back down into these levels at some point. All right, now let's move down to the smaller time frame. Now, this is not to say if I don't see a nice trade setup, I wouldn't take it, but I'm never the one to chase after the market. And since price has already left the station, it's very hard for me to actually jump into a trade. I'm not one of those trend traders that chases after price. I want price to come to me. So it can take some time. I do tell you that. It can take some time for price to get to this level, or it could happen within a day or two. We don't know. But if I'm looking to trade this, this is what I'm looking at here. I'm looking at this level as currently support. And I'm looking at this level as currently resistance. Where is price in relation to the support and resistance level? It's in the middle, right? So, with that being said, price could actually do that, or price could actually do that. So there's some level of indecision right there as a trader, where I would not advise trading at this point. Now you can make some short-term trades. I'm not in for short-term trades. I'm in for the long haul. I'm in for long gains. So if I'm going to trade this, I'm going to trade this at one of two levels. I'm going to trade this either at the resistance level, or I'm going to trade it if price comes back down to the support level. That's basically it. So I'm looking at 112.15, 112.20 as my support level to see if price actually comes back into this level. Then I'll look for a price action movement to go long, or if price gets into this resistance level, then I'll look for a trade to go short. So that's basically it on the euro chart. Now again, guys, a lot of you might disagree with my analysis and said, hey, it's going to take too much time for price to get into these levels. Well, guess what? I really don't care. Um, I've been doing this for quite some time, and I get to learn over that period of time that chasing the market is very costly. So I want to wait for price to either get to my R level or get to my S level before making a trade decision. All right, let's head down. Let's head over to the pound dollar. All right, so on the pound dollar, let's go to the daily chart. On the pound dollar, pretty similar to that of the euro. Let's go to the, okay, yeah, pretty similar to that of the euro. It's bullish. So we see where price actually hit these support levels again, and it held at this point. We also look at the MACD. We're seeing where the bars are clearly above the signal line, which is this red line right here, which ultimately indicates that the market is pretty bullish at this point. So we're looking for trade back into the upside. Now, is this far gone? Well, let's find out. All right, so from the daily chart, we know that our bias is to buy. We're bullish. Now the aim is to actually find an entry point on the smaller time frames with pattern confirmation to get into a trade. All right, so on the forward chart, we're nice strong downtrend. We're seeing a nice inverse head and shoulder pattern right here. Market retested that high, and then price pulled back. Now I would have expected price to actually fall lower back into the left shoulder right here with this price movement. I would have loved to see that happen, where that becomes the red that becomes the right shoulder, and then price just starts going upward. So what this is kind of telling me at this point is there is a possibility that we could actually see the market create that right shoulder and then rally back upwards. So since my trade bias is to buy, I would be looking for trading opportunities at 1.2605, 1.2600. So that's also a nice psychological level that I'll be looking to get into the market. Now, for you short-term traders who are looking for quick profit, if we head down to the 1 hour chart, we're seeing where the market's a little bit choppy right around here. Now, if I'm going to go short on this trade, it's a little bit choppy right here for me to decide in getting into a trade. But if I was going to get into a trade right here, the one thing I would want to wait for is for the MACD bars to get below the signal line. So what I would be doing is pretty much waiting for price to do something like this, and the bars start trading below the signal line. And what I would also expect here, and if we let's draw some lines here. All right, so market rallied, pull back, rally, pull back, rally, pull back, rally, pull back, rally. Now, here's where the uncertainty comes in. Price broke support there, and then the market retested the high, creating a double top pattern. Market dipped lower, but then price actually went higher than this resistance level right here. So that's giving me a little bit of caution in this trade. Um, but let's say, for example, we see price here. So let's look at this leg right here. So if we see price do this, rally up, come back down, let's say it makes another retest of that high. Let's say it does make another retest of that high, and then falls into this level of support. So it actually breaks this support level where price is currently. Then, and only then, if price goes back into that level of resistance, would I be able to would I actually make a trade to go short? So certain things have to set up in the market for me to execute a trade. And this basically is one of them. Now we can look for other patterns within this area right here. And let's take a look at another pattern that may emerge from this area. All right, so this we have right here is a would be a double top pattern. All right, let's say price does create a new high there, and then falls back into support, breaking this support here at X. Now with that, if that happens, then we have what is potentially going to become a head and shoulder pattern. So now we have the left shoulder, we'd pretty much have the head right there, and then we'd be expecting a right shoulder somewhere over here. So at that point, I would expect the market to rally back into this level, probably equaling the left shoulder or the left tip, and then this is where we would execute a trade, stop loss above the high, and then take a trade to go lower. Now again, this is short-term trading because the bias of the market is bullish. So ultimately, we're looking to buy into the market. But if we're looking for short-term trades, or we're trading against the trend, or what we call counter trading, then this would be a nice setup to go short, make some extra pips here. All right, another setup is, let's say the market consolidates at this level. So with that in mind, if the market consolidates at that level, then we'd simply be waiting on a breakout. Price breaks out, price pulls back, entry, stop loss above these highs, and we're taking a trade to go back into these levels of support, where again we'd be looking for pattern, guys, to actually go long in the market. All right, so that's pretty much it for the pound dollar. Let's go to the Canadian dollar. All right, starting with the daily chart as usual. Nice strong down move here. We had a lot of bearish momentum over the past few days, and we're seeing we're hitting the support level. MACD is pretty strong to the downside, so we can see further down move in this market, but the fact that price is at the support level, we could expect a pullback. All right, so this is pretty much straightforward. Now, with support being here, and let's say look at it this year as past support is going to possibly become future resistance, we could expect the market to come to retest these highs and then fall lower. So that's pretty much my bias. Now that's on the daily chart. Let's take a look on the smaller time frame. Now again, we're looking at around 1.3385 as our resistance. So let's head down to the smaller time frame. All right, so on the forward chart, we are seeing nice down move. I like to see these down moves, guys. And if you notice, past support becomes resistance. Market break support. So if I'm looking to trade this to go short, again, I'm not chasing after the market. I'm looking for logical, rational areas to get into the trade. So if I'm looking to go short in the market, my ideal area in getting into this trade would be back into these resistance level right here. So past support becoming resistance. This is where I would look for a trading opportunity. My stop loss would be above this high, and I'd be taking the trade lower. All right, now that's on my forward chart. Let's see what's going on the hourly chart. All right, now on the hourly chart, same trend here. Down move, price kind of consolidated here for a minute. And we're seeing the MACD poised to turn upwards. So again, for you short-term traders, if we do that, I'm actually getting better at drawing my arches. All right, so if I'm looking to take a small trade to the upside, again, what I would want to see is for the bars to be above the signal line. Next thing I would want to see is a little bit more base or structure at these levels. I want to see a little bit more structure at this level. So I want to see a little bit more consolidation at this level and then a break to the upside. If I see a break like that to the upside, then on of course on my pullback, that's where I would look to execute a trade to go long back into this level of resistance right here. Now again, for me, since I'm bearish on this chart, I would actually simply be looking for bearish confirmation patterns at these levels in the market. So again, 133.62, 133.58. So anywhere within this range, I would be looking for a sell trade. Again, I would be looking for any bearish pattern, head and shoulder pattern, double tops, anything of that nature. I would be looking to get into a trade here. All right, now let's move over to the US yen. All right, US yen pretty choppy right around here. So we're seeing obviously where the market has been going sideways for quite some time. Let's go to the daily chart. All right, so on the daily chart, we're pretty bearish. However, we are at a critical level of support right around here. Um, let's do this. And remember, guys, support and resistance are not, let me repeat that, they are not specific price points. They are zone areas. So this right here is my support zone. Now, I could actually look for a trade to go back into this level of resistance, even though we're bearish. We're seeing the market making lower highs and lower lows. We possibly could see price retesting these lows at some point. But for right now, the fact that price is at the support level, I'm actually expecting a pullback in the market. Let's take a look at the forward chart. Now on the forward chart, we have a nice bullish move on the MACD, but look what happened on price itself. Price itself just went sideways. So with that in mind, this movement right here is a little bit indecisive. So we have price going sideways. We have the indicator, which is clearly bullish at this point. Now, if I were going to go long on this pair, what I would want to see is for price to break out of that area of consolidation here. So this could just be a late starter for the market, but I want to see price break out and close, guys. Remember, a valid breakout is when price actually breaks and closes above or below a resistance or support area. I don't want to see it breaking and then closing back below it. So it would look something like this. We're leaving a wick behind. I want to see a break and close above that level before I can determine, yes, this is actually a clean break in the market. All right, so let me actually enlarge this a tad bit. All right, so what I've been waiting for is price to actually break out of this area of resistance right here. So we already have the MACD bars trading above the signal line. That's great. That's perfect. But what we want to see is price breaking out of that level of resistance. MACD still above the signal line. Still want to see that happening. And then on a pullback, that could be my entry to go long back into these levels of resistance. Now, of course, as I said, our bias is bullish. So we'd be looking to exit or trade somewhere around here at around 109.26, 109.40, 109.70, somewhere along here before we're looking, and then we'd be looking to take a trade back to the downside. Not going to mess too much with the hourly chart. Um, Not going to mess too much with the hourly chart because the forward time frame has basically provided me with some clarification, some clarity as to what is likely to happen. So I'm going to stick with the 4-hour chart for right now and see if price actually does break this level of resistance. If it does, then I'll take a trade to go long. Now, one thing that you guys can do when waiting for price to break a resistance or support level is simply set an alarm versus staring at your computer screen 24/7. So what I'm going to do is right click, go to trading, go to alert, and set my alert right there. Now I can adjust my alert by placing my mouse on the red line or the red arrow, left click and hold, and I can actually drag. So once price actually breaks over this level, I will be notified. As long as my computer is on, I will actually hear the beep in the chart. All right, so that's it for the US yen. Let's take a look at one more currency pair. All right, Aussie USD. Start with the daily chart. Aussie USD, nice up move. We have a nice move to the upside, so it's pretty bullish at that point. We're again, we're looking at past support becoming resistance. We could see a pullback. So if we see a pullback back into these levels, this is pretty much where we could look to execute a trade to go long. Again, this area is something that you need to contend with because this is again resistance level. So getting into a trade here, we have to expect that price is gonna stall here. So that's 69.38, 0.700. So we're looking at around 60 pips. I'm not that great at math, but we're looking at around, as a matter of fact, let me do this. Yeah, I was correct. 60, 70 pips to the upside. Now, of course, with the MACD fully bullish, clearly bullish, then we could actually see price get into this level of resistance at some point. But the aim is getting in at the buy at the right price. So it's always in the buy, guys. Profit is always in the buy. All right, now on the forward chart, we're seeing divergence. See a high, market made a slight high there. So we're seeing some level of divergence. So at this point, we could actually see price fall back into these levels of support right here, where we'd be looking to execute a trade to go long. All right, let's take a look at the hourly chart. See if anything else on that stands out on the hourly. Nothing really stands out on the hourly chart at this moment. Um, yeah, nothing really stands out on the hourly chart. So again, I'm going to stick to the forward chart. Now, you might ask why I'm sticking with the forward chart versus the hourly chart, where we can get into a trade at a better price with lower risk. Well, it all depends on the market environment. Because if I'm looking at the forward chart and I'm seeing a clear pattern or some clarity on the forward chart versus that on the hourly chart, I'm going to stick to the 4 hour time frame. If I'm on my hourly chart and I see more clarity or on the hourly chart versus that on the 4 hour chart, then I'll stick to the hourly chart. So it all depends on how clear you can actually visualize the patterns that is going to be developed on the right side of the chart. That is pretty much one of the main things in forex trading, trying to visualize what is likely to happen on the right side of the chart. We don't really care what's going on the left side. We do care what's going on. Let me rephrase that. We do care what's going on the left side of the chart. But the left side of the chart is not going to make us money. What's going to make us money is what happens on the right side of the chart, what is not yet seen. So we have to be able to visualize what is likely to happen in the market at specific levels of resistance and support. All right, that's it for me, guys. And if there are any questions, feel free to make a comment below. If you're on Facebook, comment if you're on YouTube, if you're watching this on YouTube. If you're watching this on YouTube, again, please remember to subscribe and share and like. If you're on Facebook, again, same thing. Share, comment, and like. All right, guys, it's been a pleasure, and I wish you a great week when it starts. Until next time, I'll see you soon. Bye bye.